when banks start making money off this. Jamie Dimon and these guys are going to change tune real quick. So,
but they kind of already are. This is one of the other things that, forget any one bank, but a lot of them are saying negative things in congressional hearings or in interviews, but they have teams working on this stuff.
Yeah, it's great. You bet that everybody at these large Wall Street institutions are seeing Coinbase's earnings and Coinbase's EBITDA 5xing in a year.
What's up, guys? Today's episode is with Quinn Thompson, the founder of Lekker Capital. I think he is one of the more interesting investors in crypto. He takes a macro overlay and puts it on this industry. In this conversation, we talk about the relationship between the macro environment and the crypto industry, where he's actually allocating capital, how he evaluates different assets, what data points he looks at in the macro environment, how the global world is related to here at home in the United States, how fiscal and monetary policy both implement into the crypto investing, and then we get into some fun stuff like the politics of the incoming election and also meme coins. This conversation was a lot of fun. I learned a ton, and I think that you guys will really enjoy it. Here is my conversation with Quinn Thompson. All right, guys, bang, bang. I've got Quinn here with me. I thought a great place to start this conversation is understanding how does the macro environment influence crypto, and then maybe also how crypto is starting to influence some of the macro environment.
Yeah, absolutely. Thanks for having me. Bitcoin is interesting, and I kind of think everything stems from Bitcoin. And how I view it is sort of like 50% gold and 50% NASDAQ, where it has these attributes that at different times it's more correlated to different parts of the market. And kind of breaking down that further, if you look at gold, the traditional correlation between gold is an inverse real rate hedge, basically. And so when real interest rates are rising, which is nominal interest rates minus expected inflation, those are rising. Gold suffers because it's the cost of capital is rising, and it makes this asset that produces no cash flow, doesn't really have a ton of utility or earnings power, less valuable. In those cases, NASDAQ, when interest rates are rising because of a strong economy, earnings are growing, stocks are performing well, the economy's strong. And you see, it's almost balanced out. So I kind of think of it that way, where you have, it's like a more levered gold. There's a lot more upside with the technology component, but there's also this risk on, tech stock element that you definitely need some animal spirits for the asset class to do well. I think how it impacts macro is it's too small at this stage to really have knock-on effects in other places of the market. But one thing that whether crypto natives like to admit it or not is it really is a byproduct of the easy monetary policy for the last couple decades. And that's not to say it doesn't have a use case, the technology isn't good, or it's not going to be a pivotal thing in the future. But if you would have had sound monetary policy, for example, not this excessive spending and really this global issue, you probably wouldn't have had the same level of innovation and technology, advancements with Bitcoin and crypto.
So if you wouldn't have as much innovation, as much kind of technological progress without the easy money, is that an argument as to like maybe why easy money has been a positive thing versus a negative thing? Like most people focus on the negative and they say, hey, you're debasing the currency, you're hurting, 50+% of Americans. Things aren't always black and white. And so is that the positive impact of the easy money?
Yeah, definitely. People are looking for this life raft away from the traditional system where if you even look in the last 2 years, again, the trend is the top 1% wages, the highest earners in the country, are growing at a much faster clip. And the bottom 50% incomes haven't grown. So obviously the headline inflation numbers have come down, and that's a function of some of the supply chain issues being worked out and the Fed, tightening policy. But we're actually seeing a relaxing of that tightened monetary stance, not just in the US, but globally. It's an important factor as well. And it bodes really well for crypto and really anything, houses, real estate. And we're seeing it in commodities that you can't print, things that are nominal hedges.
When you say that this stuff is good for houses, Bitcoin, et cetera, anything priced in dollars seems to just go up over time. And And I think historically people thought if inflation was high, you would buy kind of true inflation hedge assets, things like gold or real estate. I think Bitcoin is trying to enter that conversation, or maybe has entered that conversation. But also stocks seem to now be, somewhat of an inflation hedge. And what's interesting to me maybe is like the historical stock valuations seem to be less valuable because there's almost like a monetary premium being put on stocks as well, where people may not just be buying it purely for the valuation of the individual company. They actually may be trying to hide from some of this inflation or debasement as well.
Mm-hmm. Yeah. The other thing to look at is equity and stock performance in real terms. So if we're back at right around all-time highs that we reached in 2021 in the S&P and a little higher for the NASDAQ. But if you look at those levels in real terms, adjusted for the 4% inflation last year and 8% in 2022, we're actually not yet at all-time highs. So what tends to happen in these inflationary regimes is nominal, as you said, stocks, their earnings are nominal. So when there's inflation, their earnings rise in US dollar terms. Those all go up, but they don't have as much of liftoff when inflation's high. And actually one of the interesting things and kind of feeds into, I think, what we're going to see over the next number of months and year is we had this huge inflation surprise, and the Fed called it transitory for the better part of until 2022 when it was way above target. And inflation volatility. So the standard deviation of inflation, we went from like 0 to 8, and then we've come down to 3. And this market's in a transition where, okay, everyone's kind of coming to the conclusion that we're not going back to 2 like monetary policy authorities are targeting, but we're also not skyrocketing back to 6. Mm-hmm. And you can have healthy equity and risk asset markets when that standard deviation, the volatility of the inflation isn't 6, 4, 8, 2. Like if it's just steady at 3, the Fed talks about price stability. They don't necessarily, price stability doesn't imply, something about the growth rate. It implies a steady growth rate. And so what, one of my arguments is that they're actually okay with inflation in the 3 to 4% range. And volatility is back down to like 2020 levels, which is actually all right for companies who can pass along those price increase and they have earnings power and operationally they're levered.
Yeah. When you think of Bitcoin, maybe versus some of these other assets, it feels like, S&P and kind of traditional stocks, NASDAQ, gold and Bitcoin all are benefiting from this currency debasement. Bitcoin's just like the most asymmetric of them, or like why are people allocating to Bitcoin maybe than some of these other assets, which people would either say have been around longer, maybe lower risk, or potentially have different ways to value them?
Yeah, to me, there's a couple characteristics that make it really unique. One is the global accessibility. When you think about how traditional financial systems are controlled, it's really top down, and that's one of the biggest beefs, right? With how the rich have gotten richer and the wealth inequalities. And crypto, Bitcoin inherently is a grassroots movement. It started with the $1 to $100 investors and traders and builders that brought it from the ground up. And that's where you've seen this just virality of it and why it's grown like wildfire is because it's just much more support conducive to mass adoption in that sense. And it's just a fraction of the size. And I think there are these technological tailwinds behind the industry, the AI, the tech movement. The one thing that the positive of suppressed interest rates for a long time is it's lowered the cost of capital, allowed tons and tons of investment to flow into technology and more speculative ventures, which has very significantly progressed the advancements we've been able to make on that front. And there's meaningful tailwinds behind, that USDC campaign is an example from Circle, pushing this new money, and it's natively global, whereas stocks trade for 6 hours a day, 5 days a week in one country, and it's difficult to access. So I think there's all these innate characteristics of the asset class that make it much more accessible. It's much less controlled by centralized authorities. And so it has some semblances of like the last free market that kind of exists.
So there's a lot of different ways to invest in kind of Bitcoin and crypto in general, right? There's people who just frankly, they're not doing any work. They're just buying something somebody told them to do, and maybe it works, maybe it doesn't. There's people who may be a little bit more sophisticated, and they've gone and they've read white papers or try to understand the technology, and so they're buying technology, but not necessarily markets or kind of financial price movements. There are some people who are doing actual valuation methodology or technical analysis, et cetera. And then maybe even there's some like quant folks that are kind of trying to ingest data and figure out what to buy, sell, hold, et cetera. You all at Lekker Capital have somewhat of a nuanced kind of view as to how to trade or invest in these assets. My understanding is that you're basically taking this like macro overlay, but still allocating to the crypto industry. So describe a little bit as to like, why is nobody else really doing this? And then why do you think it's so advantageous to take this approach?
Yeah, good question. It is a unique strategy, and there's not many people really looking at it this way. I would say, so my background is traditional, Wall Street, fixed income and credit, where I spent the first 7 years of my career, underwriting and in the capital markets. I've been in crypto for the last 5 years, and obviously always kept that traditional approach with me in how I evaluate value and fundamentals. Crypto is such a high growth industry that there's a lot of speculative component as well. But basically, my view is that there's some very, very strong correlations between the asset class and traditional macro variables, interest rates and the cost of capital, what inflation is doing, what overall risk sentiment is, and that produces some very supportive environments to be long crypto assets, and also some very non-supportive, as we've seen in what some would call these 4-year cycles. Within that, I think that from some of the work and research and years of kind of refining my process in this asset class, I found that those variables, what makes it confusing is they change from time to time. Sometimes interest rates spike and it's bad for all risk assets. Other times it's a low growth environment, which like 2019 can be bad for crypto because liquidity is falling out of the system, and crypto is kind of the tip of the spear for liquidity. So what we found is that overall, we kind of take this macro approach that tells us risk on, risk off signals that informs, do we want to be positioned in Bitcoin? Do we want to be positioned in cash, broadly? And then based on, the intensity or lack of risk on signals, that tells us to go further out the risk curve than Bitcoin, or, kind of, play defensive. And really, I think the core tenet of my thesis and the understanding is Bitcoin is we think of it like gold. We think of everything else is tech. And, from the outside looking in to the crypto industry, everything looks like a coin and a token. And that's just, it'd be like if you said, because the gold ETF and NVIDIA trade on the same exchange, that, those are both public securities. And there's so much nuance. And so I think that's confused some people, where we've had this environment that's been really strong for Bitcoin and actually not that strong for the other crypto assets. And there's underlying fundamental reasons for that. And so we're looking at these things and making decisions on allocation and position sizing based on this macro informed view.
Walk me through your process. Like what are the indicators or data points you're looking at on the macro side that are really informing to be risk on or risk off?
Yeah, it starts. So you hear a lot about liquidity in the system, and crypto really is this tip of the spear liquidity. You need way more liquidity in the system for crypto to perform well than you do for stocks, for example. There's much more earnings power and cash flow associated with publicly traded equities than there is crypto. But ultimately, they're both expressions of a risk-on trade. Some of the things that we look at are real interest rates and the cost of capital. So an example here is in 2021, what produced such a positive environment was we had inflation rising. So companies are being able to raise their prices, their revenues increasing on a nominal US dollars price basis, and normally associated with rising inflation is monetary policy that's restrictive. 2021, they called inflation transitory for the whole year. And it was just until December when they started even stopping their asset purchases on the Fed balance sheet. And that was really the slow moving ship that if you took a 30,000 foot view, there was no surprises as to why tech and crypto had a 2022 like they did. idiosyncratically, there were some credit events. I call it the great financial crisis moment for crypto, when we had all these kind of banking blowups, and those were byproducts of some of the over leverage and problems in the space. But at a broad level, they started because of the shifting macro environment. And the Fed went on this warpath to correct the inflation problem, raising interest 500 basis points. And then we saw kind of a relaxing of that in October 2022 as yields spiked, and we had a crisis in the UK gilt market. Fast forward through the US banking crisis, inflation came down. And here we are today, where inflation hasn't gone to 2, it's not going to 2, and the Fed is actually relaxing. And so this is an environment similar to 2021, where you have inflation steady to maybe increasing, and the Fed not doing anything about it. Again, this is an environment strong for nominally priced assets, stocks, crypto. And so that's one of the examples. You do look at broader, economic strength. Why, so I just explained why this isn't a 2022, because the Fed isn't correcting this inflation problem. It's more akin to 21. Why this environment is not a 2019, echo bubble is because the U.S. economy is actually still strong. And in 2019, you had fading liquidity, an actual quite significantly slowing recession even before COVID, leading into the September 2019 repo market liquidity crisis that the Fed ultimately resolved. So there's all these different factors, and it's kind of bundled together as just liquidity. But when you look at the measures of liquidity, they're coincident. They're not forward-looking indicators. And so you have to kind of project some of these variables like inflation, interest rate, earnings growth, economic strength to kind of come up with a view on what is going to happen 6 to 12 months out.
You've talked a lot about the U.S. economy and kind of what the Fed's doing, interest rates, inflation here. One of the things that you also mentioned is just how globally accessible an asset like Bitcoin is. And so in a time where the U.S. Fed was trying to drain liquidity, increase interest rates, sell assets, it seemed like maybe some central banks globally didn't get that message. And China, for example, was pumping less liquidity in. So how much importance do you put on what the U.S. is doing versus maybe like the global liquidity situation or specific other markets?
The US is the leader because most currencies and central banks are followers, in the sense that when Fed policy is tight, for example, the UK and the EU and the Bank of Japan are unable to significantly ease policy because it would sacrifice their currency. And so it is very important to kind of see the US as the bellwether. And it's a little bit like the cleanest dirty shirt in the laundry. There's some, the dollar milkshake, some of these theories out there about what implications for a strong dollar. And that's something that's probably thrown traditional macro investors off a little bit, who haven't been as attuned to the debasement theory, which is when every global central bank in unison is expanding their currency base, the relative, dollar yen, dollar euro, dollar, and intra-currency relations matter a little less, because they're all kind of inflating at this same rate. So it is very much important to look globally. I think that's one of the catalysts coming up, where we've seen both in October 22, and we've kind of seen it recently, where Japan, who's one of our largest allies, the largest holder of U.S. government debt, is facing a currency problem. And right now, their interest cost annually is 25% of their annual budget, and they're basically at like between 0 and 2% rates. So they can't really meaningfully increase their interest rates, and they have to do something to stop their currency. And one of those things would be weakening the dollar. And so we've seen some coordination between Japan monetary officials and the Treasury and Fed here to take steps to do that. And in some ways, if the dollar kind of relaxes monetary policy of the US, it gives a green light for China, Europe, UK, Japan to stimulate a little more. And that's overall, very positive for risk assets.
Now, when you see the United States spending as much as we are in terms of the fiscal policy, it feels like the Fed was tightening, politicians didn't get that memo either. There's proxy wars going on, southern border, obviously entitlement programs. Like there's a bunch of reasons why we continue to spend. And sometimes it feels like maybe we're spending to try to drive GDP growth. Other times we're spending because people are trying to buy votes. Other times it feels like people are spending because they don't know why they're spending, right? But it's just like, this is what we do. If you give me a hammer, I'm looking for the nail. And so is that keeping us out of a recession? Like, is it actually the government is hiring people, the government is spending money, and like that's why you mentioned that the economy is so strong?
Today's episode is brought to you by Espresso, the maker of the world's thinnest portable display. Now listen up. If you're like me, you feel like you are at a command center when you sit down at your desk. I got a gazillion tabs open and different windows for different activities. There's my web browser, my text messages, I have Slack open, and I got a Notes app. I normally work on a desktop and it can be very, very productive. But everything falls apart the second I leave my desk. If I'm traveling, if I go to a coffee shop to do some work, or just want to work from the kitchen table, my laptop doesn't have enough screen space. I lose my command center and my productivity falls off a cliff. It's a major problem. But this is where Espresso comes in. They have a portable screen that is so beautiful that you think Steve Jobs came back from the dead to create it. The thing is incredibly light, it comes with a nice stand, and the user interface is so easy that I figured out how to do it in less than 3 minutes. If you listen to this podcast, you know that's not an easy feat. So the Espresso team and I, we became friends. I got to know them because I really like the product. And those screens, they now want to offer them to any fan of the podcast. So we struck a little deal. Here's how it works. Anyone who listens to this podcast can go to us.espres.so. Or, if that's too confusing, just go click the link in the description. If you go to Espresso's website, they've got a brand new offer there sitting for you. You get a little discount and you'll get a beautiful screen. Trust me, I use mine every day. You'll love the Espresso screen and I think it'll make you more productive. Go check them out today by clicking on the link in the description.
Yeah, pretty much. It's and it's not just the government spending, but it's also the knock-on effects from that. You know, when the government is spending, they're building bridges, they're building roads, they're investing in AI and new infrastructure plants. And a lot of that gets funneled to the private sector, who then pays salaries. Those salaries go to stimulate the local, grocery stores and taverns. And so it's this very, not just first order stimulation, but second and third order as well. And that is really, in my view, what has kept the U.S. economy so much stronger. You know, undeniably, the question for the last year plus has been, how has the U.S. decoupled so significantly from the rest of the world? Europe, UK, Japan, China, all the big developed nations are facing much slower economic growth. And the answer to me, and I think most people agree, is on the fiscal spending. We're spending on an annual basis as much as we do in wars or deep recessions, which is very unheard of and atypical. What I would say is the actual question that's people more hotly debated is why is this been able to sustain itself in emerging markets and other places where they spend hand over fist and therefore have to finance these large deficits. It usually creates problems for the currency because you're issuing so many sovereign debt issuances that it puts a lot of pressure. You need extra buyers to come out of the woodwork. The price of those instruments has to fall to find the marginal buyer. And in the US, we haven't had that problem. The dollar's as strong as it's been in a long time, and our interest rates, they're higher, but they're not, blowing out. And to me, the answer to that is in the piping of the Federal Reserve. The reverse repo facility is something that gets a decent amount of attention. But if you look at the trend between in COVID, they actually stimulated so much that they stockpiled $2.4 trillion of excess reserves in 2021. And they started draining these in late 2022 through 23 and into this year. And that's, to me, what's supporting things from a liquidity perspective. When the Treasury goes to issue all this excess debt to finance these deficits, they actually don't have to take all that money from the private markets. They're getting some of that from these excess reserves at the Fed. But that runs out at the end of this year probably, or sometime between now and the next 9 months. And so that's kind of where the fork in the road, I think, is for policymakers.
Now, as the macro environment is kind of playing out, in this way, people obviously are buying a lot of crypto. I mean, we're at $2.7 trillion kind of liquid market cap now. When you all say, hey, it's a risk on environment, we want to allocate and get out of cash, buy Bitcoin, buy Ether, buy Solana, buy a meme coin? Like, how do you think through, kind of your addressable market and then risk reward of each one of these types of assets?
Yeah, so we're all liquid investors, so we don't do any private deals. We have a bias towards liquidity, and investments can rotate. We kind of take 1 to 3 month views typically, and think of the world in that sense. So definitely have a bias towards quality, where we're not day trading. We're not just playing pure momentum and narratives. You want to be able to sleep at night and long things that will be there in 12 months. But with this dispersion we've seen in the digital asset space, there is a lot of alpha to be had in asset selection, which is, I think, also a more unique and really how most markets trade. But it's different than, say, 2021, where everything just went straight up. So we view the world in both, tokens and also traditional crypto-related securities like Coinbase stock or Robinhood or MicroStrategies. And there's huge discrepancies in the reward potential of all of these. What's the adoption and usage, what's positioning and ownership like, and where the momentum and thematic growth names are. But we take a very kind of acute approach to downside protection as well. And I think in the space, if you survive and make it cycle over cycle, and you're structurally long, you're going to do well. Where we see, time and again, people not doing so well is giving back those gains. And so big focus for us on capital preservation and making sure we're in the names that we think will be there in 12 months and basing our analysis around that.
So when you start to look at, let's just take tokens first, Bitcoin, Ether, Solana, maybe are like the big three that people have been allocating to. Ether sentiment was horrible. People, I think, were very excited about Bitcoin because of the ETF approvals. Solana up a lot. Seems to, people believe that it could be the next Ether, or at least from a price action standpoint in this cycle. How do you think through those three things and maybe like the pros and cons of allocating to each one, maybe through the end of this bull market? Yeah,
I really view Bitcoin as the digital gold. I view that as your almost risk off way to play the industry. And still very risk on if you're long Bitcoin, but you get what I mean. And Ethereum and Solana as you go further out the risk curve, but those are more Mag 7 type of names. They're more App Store, Internet of Things type of internet computer. You hear all these different nomenclature. Solana to me has implanted itself as one of the big three with Bitcoin and Ethereum. That's an asset I think is here to stay. The longer it shows its prominence and its activity, it's a core part of the ecosystem. I think what is an interesting question to ask right now is what the total addressable market is of a Bitcoin versus an Ethereum, or you can talk about Solana, but those are really just the two largest. And to me, I really do think over the long haul that the leading smart contract platform surpasses the market capitalization of Bitcoin. Because if my view that Bitcoin is digital gold and gold is a $15 trillion market cap asset, you combine the Mag 7s and what's built on the value of the internet, and I mean that's just a significantly way higher, way larger. There's just such more to do. You have banking and money and financial services and social media and everything built on top of this, and value accrues to that base layer. So I think that question's been plaguing a lot of people though with the dominance of Bitcoin. So we've obviously had the Bitcoin ETF, which has led the way this cycle. And typically when crypto is expanding, other things besides Bitcoin outperform. But my argument would be that we're actually, always up until we get to all-time highs in Bitcoin is kind of like more of a recovery than it is, breaking out to new highs and people betting on this new technological innovation and promise of the industry. And so we're kind of in this recovery mode up until most recently. Sentiment's been very Bitcoin driven. And then you add on top of that the ETF, that's funneled flows into Bitcoin. And those flows are going into an ETF passive vehicle. Those flows aren't going to on a crypto exchange that can then get rotated into other risk assets. So to me, this is a turning point. I've been known to say about the last week, it's probably the turning point where momentum for Bitcoin specifically is peaked in the cycle relative to everything else. And I think as politically the situation is changing very significantly and rapidly, you want to be looking out to these things that were most harmed and disadvantaged with a more strict political regime regulation. And those, we know Bitcoin's the most sturdy, and you look at the smart contracts, the DeFi, the things like that, that stand to benefit the most. And so I think, it's the time to go a little bit more out the risk curve and into these other, technology avenues.
And then stablecoins obviously have become incredibly important in crypto. But now we saw the former House Speaker, Paul Ryan, say, hey, wait, maybe the stablecoins could save the treasury market. I've previously written a number of times about the fact that China and Japan used to be 22% of all treasury purchases. Now they're down to about 7%. Stablecoin collectively, I think, are the 16th largest holder of treasuries. It feels like maybe stablecoins aren't just important to crypto, they're becoming important to the global financial system.
It's pretty remarkable, this whole topic, because we're living in it day to day. We send stablecoin transactions. We've done it for years, and we're in this echo chamber of crypto enthusiasts. But when you zoom out and you say there's this new technology that was created, really became large over the last 4 years, basically one presidential cycle amount of time, essentially. 2020 was when stablecoins kind of really took off with USDC, particularly in the US. And you think of it like a sovereign. Think if a country started 5 years ago and grew so quickly, they were the 16th, 17th largest holder of the US's debt. US would be all over them. That guy would have a permanent room at the White House if he was gobbling up your debt like that. And then here the politicians are, they're like, we hate this industry. It's so bad and fraudulent. And you're sitting there and you're like, all right, we have all our policymakers sitting on record saying we have a debt problem. Yellen's making trips to China and Japan, begging everybody to buy our bonds. And here's stablecoins, Jeremy Allaire and the Tether guys like, hey guys, just give us an avenue to operate legally under a regulatory framework. We'll give you all the bad actors' addresses. We'll stop every criminal's transactions. We'll report all the tax stuff we need to. Just let us operate and let us have an on-ramp and off-ramp to the banking system. That'll be much safer, less, behind the doors and, illicit activity type of stuff. And we'll be here, and we'll be, instead of 16, we'll be your 5th largest buyer of debt. And so people are picking up on it. It's taken many different forms. The arguments shifted. The industry's figured out now in a much better way how to collaborate with regulators. Mm-hmm. We saw the Circle campaign and the big regulatory push on that front. And getting people involved. And when that green light comes, that's like the iPhone moment for crypto, because the regulators are going to love it. The politicians are going to love it. Users are going to love it because they're not scared of, losing all their life savings in SVB. And it's a win-win-win. So I think that's the big theme of the day in the last week is how quickly that shifted and stands to benefit the system.
I always think back to 2020. In one of the original bills around COVID, they mentioned digital dollar payments, like instantaneous digital dollar payments. And then it got taken out in a second draft. And everyone's like, well, we don't have that, right? Type thing. But you could see politicians be like, wait a second, we're physically mail checks to, 100, 200 million Americans. Are they going to get them? Yeah, right. What's going on? It just became very clear that if you want to do something like this, you're going to have to move to the digital dollars. And it just feels like since then, more and more use cases, it's just the technology solves problems. And for an industry where people will constantly critique it and say oh, everyone's just launching coins and they don't really solve problems, it does feel like stablecoins have this great product market fit. And you see it in the usage data, right? Yep. I think USDC, USDT combined do as much transaction volume as Visa on an annual basis. And again, Visa is a different system. What are people doing with the stable coins? There's a bunch of questions that folks have, but just the fact that you can get, 10, 12, $13 trillion of annual transaction volume seems like a pretty big number.
Yeah. And Visa's been around for how many decades, right? And then stablecoins have been around for, less than 10 years. And that growth is just astronomical, and it's difficult to deny. And that's why we're seeing it become such a political hot button.
Yeah. What about the public equities? Obviously, there's very large companies like Coinbase based here in the United States. Historically, there's been a number of opportunities in the public markets outside of the United States as well. How do you all look at maybe what the investable universe is, and then sifting through where to invest and where not to?
Yeah, it's been not a huge asset rich market in terms of the publicly traded crypto equities. We saw a big boom in 2021 with SPACs and just broader IPOs. A lot of those were Bitcoin mining companies. They were kind of the most prominent, largest organizations in the space at the time, with corporate finance functions that were ready to go. Also, the big users of capital. It's a capital expenditure intensive business line. They needed to tap into those public markets to be able to grow and expand. We've seen obviously a huge, not just in crypto, but there hasn't really been any tech IPOs since 2021. The window really closed, and it's something that the broader macro environment started, but then the regulatory environment, Galaxy Digital's one based here in New York, that very very reputable business, but they're listed in Canada. That's been an avenue. A lot of people have listed on the Toronto Stock Exchange. But it doesn't come with the same liquidity and credibility benefits as if you're listed on the NASDAQ or New York Stock Exchange. So I think that could be a big driver of momentum and growth for the industry, because what makes the US economy so strong is the efficiency and depth of our capital markets, the ability for entrepreneurs to say, I have a really good idea, check it out, I'm going to sell you on my idea, and go get funding and build that. And in crypto, there's been a ton of venture capital investment into the space, but there hasn't been a liquidity avenue to rotate and reinvest that capital like you see in other industries. And M&A and IPOs are so IPO, going public, or M&A, and oftentimes M&A is facilitated by being a public company and accessing the capital markets, is a big facilitator of that. Provides liquidity, provides investors returns, reinvests, all those strong things you need for a healthy functioning economy. So the public crypto market's been starved. Hopefully Circle can get it done this year. It's really the regulatory environment that needs to be changed, because Circle, for example, tried going public with a SPAC. And I think it was just a little too complex for the SEC to approve. So I could see that as being quite a big driver. You have businesses like Kraken and Gemini and Chainalysis and some of these larger businesses that definitely are big enough to go public. There just needs to be more investor awareness, more acceptance in the space, and slowly but surely we'll get there. So it's not a huge environment today. Like Coinbase is obviously the leader. MicroStrategies is it's not an operating company per se, but there's some interesting things there. Robinhood's getting into crypto and starting to look more at like the PayPals or the adjacent crypto businesses. But it's still such a small percentage of their overall operation that they don't really move with crypto. So we tend to focus more on the crypto natives that overlap.
Politics seems to be playing in. There's been regulation that people have been really worried about and wanted clarity. I always remind people that the clarity you get may not be the clarity you want, but clarity is coming. Yeah. But now politicians seem to be doing a 180. And my recollection of events when I explain it to people is pretty much both political parties were absent a couple of individuals on each side. Pretty much like, these people are full of shit. I don't want anything to do with this. I don't think it's good for Americans. I don't care how many of them are using it. Like, we're just not going to play this game. Trump at an event at Mar-a-Lago with a bunch of crypto people present, all of a sudden, kind of out of nowhere, was just like, I'm going to be the crypto candidate. The Biden administration, they don't like this stuff. I like it. Send me your crypto, right? Like, I think that you guys should be able to do this. And obviously, somewhat pandering or playing to the crowd, but it seems like that is like kind of the shot heard around the world, because when he did that, now he is accepting crypto donations, kind of 2 weeks after he said he would do it. It seems like a lot of the Democratic Party now is like, oh, wait a second here. We can't like give this guy a gift and let him be the pro crypto candidate and then Biden run as the anti crypto candidate, because this group on the internet obviously has influence. They're very loud. They're very good at mimetic creation, amplification, all these things. And they have money, yep, right? Because of the value created there. And so the Democratic Party seems to have kind of 180'd. And now you're seeing this flurry of like bipartisan support for crypto, which kind of feels weird, to be honest, right? Like, how do you read what's happening?
Today's episode is brought to you by Supra. If you're building anything in Web3 or crypto, you likely need oracles and verifiable randomness too. Supra's offering the fastest oracles and DVRF free for 12 months at supra.com/pomp for a limited time.
Supra delivers the freshest Oracle price feeds across 50 plus blockchains. Be it current critical price levels or liquidation triggers, beat your competition to the punch with Supra. It's as good as having the first mover advantage on every price update. Supra is more secure, easier to integrate, and runs on up to 12x lower gas per feed than other Oracles. So you'll want to bank on this 12 months free offer as soon as possible. If you're just listening and know any builders, you can earn $1,500 by letting them know about this deal. They can get the fastest Oracles for free for 12 months, and you get $1,500 for every referral. Visit supra.com/pomp to learn more. That's supra.com/pomp.
It is a whirlwind. And we could sit here and argue all day long about who actually believes in the tech and who actually is doing it for votes. And we all know kind of where that answer sits. But the reality is what's going on. And the ETH ETF is kind of it's the tip of the iceberg, where it's the shot heard around the world and the loudest that made headlines on the Bloomberg terminals and in bank research reports. But it's really what's going on underneath the shifting. And Democrats really aligned hard and heavily with the Warren Gensler camp. As recent as 2 or 3 months ago, Warren's big campaign for re-election was her anti-crypto army. And
there was ads, literally ads on building an anti-crypto
army. I mean, and then we had John Deaton running against her in her own district. Supposedly, that kind of stirred some things, and you've just had this big shift with Trump kind of putting his foot down. Probably huge props to Vivek for making that a core policy. But it's really turned into this, what I call a losing situation, where it was a political issue, very, very, one side Republicans kind of latched on and, were pro crypto and innovation and less regulatory red tape. And the Democrats were digging in, and, maybe it had to do with the relationships with SBF. So that's a very ugly environment, because it's no one gets anything done. There's really no merit involved. It's just ideological and pandering there, but it's now a win-win. And to me, this is, put the macro aside from the bull case here and for risk assets broadly. This is paramount to the longevity of the industry, bringing entrepreneurs back on shore to the US, and stablecoin adoption. Banks, the FDIC chairman resigned, who was day one, he came in and made the organization anti-crypto. So now banks will be able to custody the asset class. And trust me, when banks start making money off this, Jamie Dimon and these guys are going to change tune real quick. So,
but they kind of already are. This is one of the other things that, forget any one bank, but a lot of them are saying negative things in congressional hearings or in interviews, but they have teams working on this stuff.
Yeah, it's great.
And so it's kind of like, don't listen to what they say, watch what they're doing a little bit. And then obviously, if all of a sudden you can drive earnings for your next earnings report, you probably are going to be pretty interested in what you could do in this space.
You bet that everybody at these large Wall Street institutions are seeing Coinbase's earnings and Coinbase's, EBITDA 5xing in a year type of thing, and saying these guys from California came out of nowhere and are kind of stealing our lunch. So it just opens up so many more avenues. I mean, I was saying this the other day, where if you gave me a white sheet of paper and said, write all the really constructive things you possibly could think of, line of sight to a stablecoin bill that allows Circle and these stablecoin issuers and banks to tap into the Federal Reserve directly. The SAB 121 that allows banks to custody crypto. Those two alone are just monumental. Mix in, the ETH ETF, which personally thought it was probably a 2025 event. And then you put those together, and the implications. I mean, let's not forget the SEC has active litigation against basically all our industry leaders: Coinbase, Robinhood, Consensus, Uniswap. These are some of the, if you talk to anybody in the space, you're like, wow, those are the stand-up citizens of our industry. And they're being made out to be criminals in Washington. And so people have recognized that, and it's becoming a, incentive. How do we get more votes? And this win-win. Now you're seeing Democrats, Republicans compete to be more supportive. And that's just a different operating environment for everybody. And I think it is one to keep paying attention to.
We saw this at the state level and the city level. I wrote recently that I think it was in 2021, Texas governor, Miami mayor, and New York City mayor. At one point, they were all like chirping at each other on Twitter, talking about who like was going to take more of their salary in Bitcoin, who was the bigger like Bitcoin city capital, all this stuff. And so we've seen it kind of at the city and state level. Now it feels like at the national level, the two parties are really going at it. And also, the independents like RFK, et cetera, like they've pretty much been in on this. So this is really the two major political party candidates now are kind of joining that. But now I start to think like, is there a global domino effect? Where if the United States goes on this, I looked it up earlier today, there's 17 countries that currently are banning Bitcoin cryptocurrencies in some form or fashion. Does that number go to 1? 0, 2, right? If the United States all of a sudden starts to embrace it, like does everyone kind of fast follow? And then also the countries who were, kind of 1 foot in, 1 foot out, hey, we're not going to ban it, but we're not really going to embrace it either. Kind of what the United States was doing. Do they now swiftly become embracing as well? And actually, in a weird way, Trump's speech at Mar-a-Lago not only forced the hand of the Democrats, but the chain of reaction of events is actually going to force all of these countries to become more kind of sympathetic? That's
a really good point. And it has to carry some weight, right? I mean, it's a very, very globalized world we live in. And social media and the internet creates the virality of everything. So you got to imagine, populism is kind of the regime we're in U.S. politics. I actually don't think Biden and Trump are all that different candidates. They have more similarities probably than differences. And that's a theme globally. That's a theme in Europe, in the UK, and you have to imagine people are like, oh wow, Trump just like on a dime turned millions of voters into Republicans for this election. And interesting stat, it's the 2024 is the largest number of people in the world ever in 1 year are voting for their national leader. So it's the biggest global election year ever in the history of advanced society, whatever that means. But that it's going to become an issue everywhere. And I think crypto isn't a U.S. thing. It's global. There's times where the U.S. leads the market, and when we have the ETF, and there's times where Asia or Europe leads it. And I would imagine you'd see more of this, and another tailwind to add to the list.
It's also interesting to me that people are like, oh, this is new. Like, there was a opinion piece that was written, everyone freaked out over about, basically if you are a one issue voter, you're an idiot. Yeah. I think it was almost like the title, right? And I kind of laughed to myself because I'm like, wait a second. People have been one issue voters for a long time around their wallet.
Yeah.
Sure, there's like, wackos who will pick some esoteric, topic they really care about, and they'll, go to the mat and argue over. But your wallet seems like a pretty universal thing that people really care about. And so is the economy better off with one president over another? Am I personally in a better financial position, right? Like, do I pay more taxes or less taxes? Like these things that, again, maybe they're nuanced in terms of the topics, but they all revolve around like, who is best for my wallet? Almost feels like if you had to pick one thing that people have been voting along forever, it's that, right? More so than any other topic or anything. And so crypto is just like maybe like the digital manifestation or like the newest, version of this. But really that's what people are doing. If they're a single issue voter on crypto, they're just a single issue voter around like who's best for my wallet or who's best for my portfolio.
Yeah, I think that's right. And it's also just, there's broader, I think, depth to the topic of more libertarian views versus less. And, I think what crypto voters, aside from just like, I think everyone agrees that, no matter how important crypto is to their life, maybe they work in the industry, maybe it's their livelihood, maybe their family's involved, like maybe they need to send payments to, their Mexican immigrant or Filipino immigrant. They have to send payments back home, and they don't want to pay 10% of that lump sum every time. So there's a lot of different, I think, angles that people come to the industry from. But to me, it's more the bigger picture in the sense like, I want the choice of how I invest, of how I custody my wealth and money, and how I use financial products, and I want the best availability. I'm never going to use every financial services offering available, but to limit what people can and can't do based on sort of an ideological belief, I think is what really people are pushing back against, and then what that means for the rest of their decisions they might make in their day-to-day life around free choice. And so it's really should not be a bipartisan topic at all. I mean, it's there's something for everybody in it. There's the freedom of financial services that and accessibility. When we're seeing banks, less and less banks in the U.S., these local and small towns have they used to have a small branch. Now it's obsolete. It's in the big city. They don't have access to the same lines of credit. It's tougher environment for small businesses, and crypto and decentralizing the financial services industry improves accessibility tremendously and lowers the cost. So it's good for what Democrats would believe in, and on the traditional conservative side, it's freedom of money, freedom to choose how you kind of use your resources. And so it's nice to see some of that rivalry kind of toned down, because there's really a lot of good here, and if they knock their heads together, they can create an environment that benefits everyone.
The last thing I want to talk about is the memes. The meme coins seem to be the other side of the barbell, maybe in a weird way, where Bitcoin, ETH really has lagged. Solana has obviously performed well, but let's call them like the large caps, with maybe Bitcoin being the dominant performer there. And then the other side of the market, like really it's meme coins. And that seems to be where capital is flowing, attention is flowing. Even I would argue kind of the eyeballs of VCs, they may not be investing as much in it, but like they have to pay attention just given the performance and kind of watching what other market participants are doing. So how do you evaluate that area of the industry?
Yeah, I don't, for the fund, we don't really do much in it. We're aware of it. It's definitely speculation. There's a component of gambling. I think there is some meaning to it and reason for it happening. It's a byproduct of, we're seeing it even in the traditional world. So I like how, dog with hat and some of these make Bloomberg headlines, but it's what's been happening in the traditional world in 2021, another kind of analogy to that environment with GameStop and AMC. So I think there's a reason for it. You go into these subreddit groups, and it's some of the most, cult-like, tenacious, collectives of tens of thousands of people. And you're reading these posts like, I don't have anything to my name. I've been screwed by the system. And so it's, again, kind of a function of this populist movement. And in the crypto market being sort of the home to, like I said, grassroots, participation, it's not an institutional top-down thing. You're just bound to see more of it. And so people have latched on. I think it's, there's a component of it that's a little bit rebellion to the top of the crypto industry too, the VCs and so on, who have been funding these large private protocols that have then launched tokens and maybe not done so well, and retail participants have gotten hurt there. So we're observing. I think there is meaning to it. It's tougher to say there's valuation backing it up or fundamentals. So I tend to not really traffic in that area, but I think it's interesting. My take would be that when the cycle is over, people who are investing in memes probably get hit pretty hard. And so it's one of those, you don't want to be the last one at the dance, but it's kind of entertaining and coming into a political year where there's all sorts of weird things that happen. It's probably a fun space to keep an eye on.
Where can we send people to find you, either on the internet or find out more about Lekker Capital?
Yeah. Just follow me on Twitter, reach out there. I produce Substack writings and I'll be putting my monthly letters out for the public pretty soon here as well. So yeah, always happy to chat with people in the space, and thanks for having me on.
Absolutely. I think you're one of the most interesting macro investors right now who's just focused on crypto. So excited to talk to you.
Appreciate it.